You might be wondering how difficult it is to get a mortgage if you're self-employed. This is Igor Shrayev with Pathway Home Loans, and today I'm going to talk about the requirements and options you have if you're self-employed. First, it's important to know what the definition of self-employment is. A self-employed individual is one that owns 25% or more of a business, a 1099 contractor, or someone that just works for him or herself. One of the standard and very basic requirements is that you've been self-employed for a minimum of 2 years and can show it with 2 years of tax returns, and there's really two reasons for this. First is that most businesses fail in the first 2 years, and second is that it takes time to determine an earnings trend. When you're self-employed, you have the ability to choose what you claim as an expense when you do your taxes, right? For that reason, there has to be a history of tax returns to be able to determine what your actual claimed earnings are. So, for instance, I may have received $100,000 in sales this year, but if I had to spend $150,000 to buy the items to sell, that means I still lost money. There is an exception to the 2-year rule, and that's for individuals that may have relevant prior experience in the same line of work. For example, an attorney that had been practicing for 2 years, or a couple of years, left the practice and started his own, or better yet, how about an attorney that worked as an employee at a law firm and then became a practitioner of the same exact law firm and now just earns more than 25% or owns more than 25% of the business. The second requirement is that your income is stable and likely to continue, and this means that it must be increasing year over year, and it's most likely going to continue from there. Whether the income is stable and increasing will be determined by analyzing your tax returns along with possibly some intermittent financials like your balance sheet or a profit and loss statement. And if you don't handle your own bookkeeping, your accountant or bookkeeper should be able to prepare any required documents for you. Now, let's talk about the options that self-employed borrowers have available. If you show adequate income on your tax returns to qualify, all of the standard options are on the table for you, including conventional, FHA, VA, and USDA financing. However, where most self-employed borrowers struggle is when the tax returns don't show adequate income to qualify. It's great to be able to claim all of the expenses when you're self-employed and also lower your tax bases, but it doesn't help when your business shows little or no income on paper and you're looking to buy a house. If you're facing this dilemma, fortunately, there are other options available for you. And even though you may not be eligible for a traditional loan, there are alternative options, and they're called non-QM loans. These options include alternative means to verify the ability to repay and range anywhere from verifying average deposits into your bank accounts, using 1099 forms to qualify, using a profit and loss statement, or even completely no income verification options at all. One thing to keep in mind is that the less you show, the worse the terms will be. So for these programs, you may have a higher interest rate, a higher down payment, or possibly even a combination of the two. So as you guys can see, there are always options available no matter what your self-employed circumstances are. Be sure you're working with a very qualified lender that has program options available for you that meet your very unique individual needs. Thanks for watching. This is Igor Shrayev with Pathway Home Loans, and if you're interested in creating a clear mortgage plan for your unique situation, feel welcome to schedule a call at www.meetwithigor.com. Call me at 954-613-1367 or just email me at igor@pathwayhl.com. Hope you guys have a great day.